Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On Monday, EURUSD reversed in favor of the US dollar and declined sharply. However, this decline can be overlooked just like the previous rally. The hourly chart clearly shows that the pair has moved into the new sideways channel. Up and down waves alternate with each other and are almost identical in size. Within such a range, many trading signals can turn out to be false. Today, consolidation above the resistance zone of 1.16371645 would allow for a return to the 76 Fibonacci retracement at 1.1695. The wave situation on the hourly chart remains simple and clear. The last completed downward wave did not break the lows of the previous waves, while the last upward wave broke through nearly all recent peaks. Recent labor market data and shifting Fed policy expectations are supporting bullish traders. On the hourly chart, the pair made a new reversal in favor of the US dollar and consolidated below 1.1680. This level has recently been crossed frequently, so we do not recommend focusing on it. The picture on the hourly chart is much more informative and contains more levels. No signs of divergence are visible on any indicators today. The H4 chart also clearly shows sideways movement. Here is Laurie Bailey with pound sterling dollar pair forecast. Let's have a look. The British pound yesterday failed to break through the support of daily balance line. It's a red line on the chart. And today began with growth. The Marlin oscillator is anchored in positive territory, helping the price move above the resistance level of 1.3525. If this happens to target at 1.3597, the MACD line would open. Beyond that, the next level could be 1.3631, the June 13 high. However, we cannot call the bullish scenario the main one, since US Treasury yields are declining, along with American stock indices, which indicates that investors continue to move out of risk. There's also an element of anticipation around the quarterly earnings report of major AI companies, Nvidia and others. Nvidia's earnings per share are forecast at $1.01. If investor expectations are disappointed, stock indices, and with them, anti-dollar currencies, will worsen their position. On the 4-hour chart, the probability of growth is 55%. In the heat of the battle, the balance could shift. If the price falls below yesterday's low at 1.3445, the Marlin oscillator will return to negative territory, immediately increasing the probability of further decline to 60%. For growth, the price must overcome not only the resistance level of 1.3525 and the MACD line, it's a blue line on a graphic, but also Monday's high of 1.3543. Therefore, we're waiting to see how events develop. That's all for today. See you online soon.